All right, everybody, welcome back to another high-caliber, action-packed episode here of the Crypto 101 podcast. I am your co-host, Bryce, as always, joined by my friend from the other side of the coast, Mr. Brendan Viehman. How you doing, man? Are you you guys cleaning up that state of Florida of yours?
We're cleaning it up. We're cleaning up the crypto markets. Man, it's a fantastic day. How could you not be having a fantastic day when you have an interview like this one?
Yeah, I'm excited for this. This is whoever set this one up, Tivo, if you're listening, the producer in the back. This is a true treat and a true pleasure. We are joined by Jason Urban, who's Galaxy's global head of trading. We're going to dive into a ton of cool stuff. But first, Jason, welcome to the Crypto 101 podcast. How are you doing?
I'm doing great. Thanks for having me.
Yeah, man, we're excited to dive in. You've got a crazy career. You run one of the largest desks right now trading crypto in the world. So if we just back out or back up and zoom out, walk us through a little bit about your career path and how you ended up at Galaxy. I know you also ran some volatility strategies at Goldman Sachs. Tell us a little bit about it.
Yeah, absolutely. So out of college, I like most people you figure out where you want to go in life. And I really had an affinity for trading, specifically options trading, wanted to learn more, was fortunate enough to get a position at Goldman, spent a decade at Goldman, ultimately at the end running the index volatility flow business. So that just means options on S&P and things of that nature. And there's some ARBs and some trades that were structural and quite lucrative at the time. In 2009, there was a lot of talk about TARP money, bonuses being clawed back. And I kind of looked at it and said, so if I make a lot of money in 2009, the government's going to get it. And if I lose a lot of money, you're going to think that I stink and you're going to fire me. I'm smart enough to know that looks an awful lot like heads you win, tails I lose. And about that time, Don had approached me, DRW. They were getting into the equities business, had never done that before, and was able to make the move from Goldman to DRW. And then while at DRW, not only was I trading vol and doing those things, but I started a handful of businesses. And one of them that I started outside of the company was a crypto lending business, drawbridge lending. And it was the early days of crypto. I say early. It was 2017, late 17, early 18 into that ramp up. And Galaxy was one of my original seed investors. And so Galaxy invested in us and BlockFi in their lending sleeve at the time. Novo had come in and picked our two businesses. And as my business kind of hockey sticked in March of 2020, because we were embedding puts in our loans and we were doing some more structured products than pure lending, our clients did really well. They were obviously very happy. The business took off. And Mike at the time was like, hey, we really need to have you inside the four walls of Galaxy, not outside the four walls of Galaxy as a client. And I said, that's great, but I'd like to run something. I didn't start my own firm to go back to having a boss. He said, well, you can run the trading business. And so that was how I came over to get in there. Now, how I got exposed to crypto, though, another one of the businesses that I started at DRW was a cattle business. And we were running 50,000 head of cattle. And it was really more of a math problem than anything else. 6 pounds of corn costs 72 cents. 1 pound of beef trades at $1.29. It takes 6 pounds of corn to make 1 pound of beef. Figure out the cattle crush and you can start. It's all a trade. Wow. And so, Matt, we decided, my partner who was running the business with me, we decided to have a dinner for the other trading heads from DRW at the time. This is when Cumberland was not even really a thing yet. And we're at the dinner, and one of the guys who's a very well known name in crypto is sitting across the table from me, and I'm having a conversation with some trader to my right. And the guy across the table, I hear him say, yeah, I just bought 200,000 ETH for a quarter. Now, you're at a dinner with 12 traders. If somebody says they bought anything or sold anything, like it's like the record scratches, and then I turn and I say, hey, you bought what? 200,000 what? And he said, I bought 200,000 Ether. Now, I'm a commodities, guy as well, and I'm saying to myself, Ether, like the gas, like, are you a dentist? Like, what are you talking about? Said, no,
what's going on?
And I was like, Ethereum. I was like, oh, that's that crazy internet money of yours. And I went back to the conversation. But that night I went home, and because I'm old, in the early days of the internet, I never really thought that the internet was, I made the mistake saying, yeah, this is great for email and some websites, but it was never going to be. Now I come home every day and it's like Indiana Jones cutting through the boxes of, Amazon left on my front porch. And so, I made that mistake back then, being closed-minded and myopic in my view. And that night I went home after that dinner and I said, I really got to learn about this. And so that was how and I said, I can identify with this. I understand what this means and why it's important. And that was kind of the start. And I became crypto curious, and then obviously started the lending business that led to Drawbridge, which has now led to Galaxy.
Wow, there's so many things to unpack there, and my mind goes many different directions. One, kudos to you for being kind of at the top of the food pyramid, and really actually still being open to new ideas, and not being kind of cast in stone and saying, oh well, it's just a new thing, and you learned your lesson from the internet, and you're like, it's not going to happen again. So I think that's really cool that you it's never too late to keep taking risks and keep pushing the boundaries. But
you have to.
Yeah.
It's especially this industry that we're in. It's still so nascent, right? Like, it's an early solar system, not to play on the galaxy, theme here, but there are planets that are forming, that are things that are happening, but it doesn't mean it's set in stone. It doesn't mean there's not more opportunity for the latest and greatest or the new things that might actually, revolutionize finance further than what we already think, because it's just boundless.
Yeah. So I also want to touch on one thing. March 2020. I was there. I remember it vividly, and it sounds like you kind of won quite a bit during that collapse. I remember Bitcoin. I woke up and it was down 50% in a day, and they were talking about bringing interest rates down to zero, and the whole market was crashing. But it sounds like you layered in some puts into some strategies that paid off big. So could you kind of tell us about that? That caught the eye of Mike Novogratz and kind of ended up with your new gig.
Yeah. So the structure, if you think back to I'll say 2017, 2018, the lending rates on cash against secured by crypto were astronomical. And it was because it was a volatile asset class. And me being a markets guy, I was looking at it and saying, how do you lend money against an asset that can be cut in half in one day at anything that's a respectable LTV or anything that's a respectable, interest rate, right? Yeah. It's really hard. And so, as I was working through that, one of the things that popped up for me was, hey, if we could embed a put at the LTV. So if Bitcoin, and I'll use the example because it's, let's say Bitcoin's trading 100,000 and you want to borrow $80,000 against your Bitcoin. I'd say, okay, let me buy the 80,000 put and I'll lend you $80,000. So now if it goes to zero, I'm protected. And in order to pay for all of that, because it's expensive, I'm going to sell a call. So I'm just collaring up the Bitcoin. I'm going to sell a call, and the premium that I collect is going to pay the interest rate as well as the put. And that whole structure, I can lend you money at zero now. And so you're protected. Now, the downside is you lose your coin to the upside. But for miners or people that had desires to sell anyway, this was a structure that made a lot of sense. So they were able to borrow money at zero, not have to take a capital gain on their Bitcoin, and by selling it. And all they did was lose the upside if Bitcoin went to 120K in this example. So it was a business that made sense for a segment of the market, and it really performed well in March of 2020.
Wow, that's awesome. Brendan, what do you think of that? Are you getting into the options game at all? It's a tough game. It's a tough nut to crack, man.
It is. I'm quite a big trader myself, and I love the game in just about every way that you can get involved. And yeah, I've gotten into it myself here recently. I think it's no secret that I have been pretty long biased, but I was in the same boat back then, obviously on a much, much smaller scale. But I think that there was a huge opportunity in the market back then. And I think it really goes the distance and shows just how much you truly know what you're talking about over there. Because that was not an easy time for anyone.
Yeah.
And, now we're kind of fast forwarding a couple of years out of all of that. And I think that there's an equal opportunity right now at the point of the market that we are currently sitting at, in the same way that there was a different kind of opportunity back then. And we cleaned up a lot of the mess with FTX and a lot of those other institutions that went under. And we really have cleaned up the space and worked on it and put it into a spot that it was never previously at before. Yeah. And my kind of viewpoint here is that moving forward, we're going to have an equal opportunity to kind of recover things. And we already are, at the time of recording this, we're higher than we were at the FTX debacle. And I think that the whole crypto space has a long ways to go from there.
Yeah, no, I mean, yeah, you said it well. I think, when I take a look at where we're at, we're kind of breaking out of this, reaccumulation range, right? We broke out from 15,000 all the way up to 75,000 in March, and then we've kind of reaccumulated. We dropped back down, but now we're breaking out. There's lots of catalysts on the horizon, whether it's potentially interest rate changes or regime changes and all that kind of stuff. Jason, when you kind of take a look at where we're at right now in the market cycle, do you kind of look at these trading ranges like, hey, we're breaking out of a trading range that's significant? Or do you think like the technical analysis aspect of, kind of timing the market is bogus?
No, I think that there's always an element when you have an industry like ours, there are going to be factors that play in, right? And there's more and more eyeballs coming in, which also dampens volatility because you have people who will collapse those ranges a little bit. But I think you have to look at that. You have to look at your 200-day, your 50-day. You have to look at the moving averages. You also have to understand, what's at play. And crypto, so much of crypto, there are, animal forces in both directions that impact that, right? Governments are selling. We're all there. Oh, the U.S. government's selling. The German government's selling. Yeah. There's some Chinese province selling. Okay, these guys have to buy. There's a natural bid. And so understanding those forces against the backdrop that the marketplace that you're in, the combination of those two will give you a pretty good sense of, okay, are we going to trend for a while because there's this fight going on for weeks and weeks? There's, I've been a seller at 69K, and, we can see it. We can see when the TWAP turns on. We can see when the TWAP turns off. And so, okay, what's the counterbalance to that? And so understanding the actual flows matter, and then understanding the backdrop you're in, because you're also not only using your opinions of how to trade the market, but trying to guess what other people are doing in some way. And you have to kind of be a good guesser. There's a little bit of that element to things.
Yeah, I couldn't agree more. And kind of like touching back on what we were talking about a second ago with options and all these other things, it has been so cool over the last year, especially since the Bitcoin ETFs came out, to see the expansion of how Bitcoin can be traded. Previously, even fast forward to a market cycle or two ago, you had to be at least a little bit crypto savvy. You had to get familiar with an exchange. You had to go to a crypto-centric place and trade on a crypto-centric exchange. Fast forward to the current day, you can trade it on a lot of centralized, more traditional platforms. You can do it on money transfer programs and platforms. I know like Venmo and PayPal and a lot of these places support it. You can go on to stock trading ones and you can buy Bitcoin options and you can buy these leveraged ETFs. And there's all these different ways to get plugged into Bitcoin, which has made it really opportunistic. But I think the thing that we've seen here is that Bitcoin has been able to hit new all-time highs inside this market cycle. And even at the time of recording this, it's consolidating towards its all-time highs. But many altcoins have lagged behind Bitcoin. And what we've seen is kind of the result of this is that Bitcoin dominance has been able to skyrocket and push up to multi-year highs. I mean, the highest levels that we've seen since just about spring or March or April of 2021. And I want to get your opinion on why you think that this is the case. Do you think that it's the case because of all these new avenues to invest in Bitcoin, whether it's the ETFs or something else? But why do you think it's the case that Bitcoin has been able to kind of move up to these all-time highs while altcoins might have lagged behind a little bit?
It's certainly helped that there's a narrative around it. We're in an election year. Obviously, that's an important aspect of what's going to happen. So Bitcoin becomes the standard bearer for all of crypto. and then add on those catalysts of, is there going to be an ETF? And there is an ETF. Okay, how is that going to get into people's hands? Because it's not just simply, the government saying, okay, we'll allow the ETF. There's a bunch of plumbing at a lot of these broker dealers and places, and so that's taken time. But while that's going on, people are attracted to it, right? And so naturally, there's a great story. The other coins, the altcoins, there's nobody out there that's going to drown out that massive narrative that this is real. And then you've got the Nashville, Trump speaking in Nashville, and all of a sudden it's now back on the national stage. And so it's Bitcoin that he's speaking about. Yes, there's other things there, but people are focused on it. I think that as that becomes more mainstream, you'll start to see these altcoins, where their narratives make sense and the problems that they solve are going to be brought back to the forefront. And when that happens, you'll see them catch up. And I think that you'll see that it'll depend on the outcome of the election. I know that we're filming this, it'll be shown after the election, but how that plays out will also tell you how the altcoin universe should trade based on perceived regulatory action on the heels of whomever wins.
Yeah, no, it's something that's been going through my mind a ton as I kind of manage my crypto. I'm looking at kind of two buckets of altcoins. Like Bitcoin's obviously in a class of its own, and then I kind of bucket altcoins into two classes. We have like the meme coins, which are open about sort of their lack of utility. They're all about community, and objectively they have ran quite hard in the past year or two. If you just take a look at price, and then there's the other bucket of coins, which is like the tech VC coins, things that are like pretty well invested in by venture capital firms and stuff like that all around the world, and they tend to have like high valuations. And a lot of dilution in the future as kind of tokens get unlocked and sold onto the market as things get vested. And so those tokens have seemed to have a lot of struggles, that sort of second bucket. And I think a lot of the reason why is just because like the lack, like a lot of the idea is like, yeah, there's utility and there's these like fees and cash flows and staking, but because of the regulation with the SEC, it hasn't really fully been able to unlock that. Like we haven't really had the sort of ability to pass value from the protocol to the token holders, automatically without having securities implications. But I think that changes at some point, potentially with a new regime or regulation. And at that point, I sort of think like as you have this divergence of like meme coins going up and fundamentally sound altcoins going down, there is gonna be a snapback, I think. But maybe that's just wishful thinking. But I'd love to kind of get your thoughts on that kind of binary between that altcoin universe.
Yeah, I mean that's an interesting way to look at the coins that have technological utility versus those that are community and have a more subjective approach. I think that's a solid way to think about it. I think when you think through your observation about lack of regulatory clarity, how do you take something with utility, yet it has an equity component? I mean, one of the big things is we are trying to regulate an industry that's a new technology in a lot of ways. It's probably one of the first times since gold where you have a technology that's also, in some ways a currency or a store of value, right? Like I've struggled to think of things, but gold was a great example. You could use it to make something, but it could also be, fiat currency. Crypto is that. But the rules that we have, the Act, the 33 Act, 34 Act, the 40 Act, the Orange Groves, etc. Those are all those rules were for a different technology. And so we're trying to regulate our industry with those rules. And what we probably need to do at some point is rewrite the rules to address things that aren't addressed in that 33 Act. And once we do that, we'll get some clarity and you can unlock the value of some of these projects that are improving finance, that are improving the way people move money, improving the way people behave. And so I think you'll see that happen in short order.
I agree. Now, if we kind of take a step back towards, looking at all the different data, all the different metrics that's out there, and I'm sure you track a lot. If you were to boil it down to maybe one or two, and we ask this a lot of times, people say, oh, we track open interest and funding rates, or some people are, like I said, the technical analysis, or some people just do fundamentals. What do you kind of look at to really get your nose on the right side of the market and just, keep making money?
I think that leverage is huge, right? And that is in the same sense, open interest and funding rates. I mean, that's a different way to say it, right? Because they're both symptoms of what that is. But as people are levering up, because leverage there are things where there's leverage that's visible to the market, and then there's leverage that isn't, right? Or that's implicit or implied in some way, right? And so as you start to look at that, one area where you'll see that, which might not necessarily show up in people's radar, open interest in the options markets, right? We've seen a lot of the unsecured borrowing that was happening with, the firms that have gone away, in the aftermath of 22, but they would lend unsecured into the ecosystem. And so there was a lot of leverage that was coming in. Nobody's really doing that anymore. Everything is over collateralized lending. I'm swapping one thing for another, repo type situations. And where smart people or a system, an ecosystem, is going to try to find leverage where it can. And the easiest, most available place, obviously the perp markets and then options markets. And so if you look at if you take it one step further, looking at the options markets, that too should give you a sense. It's not going to necessarily tell you, if you're watching the liquidation points on perps and other things, that will tell you like short-term trading. But if you want to look at the trend, is a market overbought roughly? Okay, let me look at the options market and what's going on there. And is it overbought, or is open interest, in that space not as prevalent as, it has been previously, something to that end.
Yeah, I mean, speaking of leverage and when it goes wrong, Galaxy is managing some of the locked up Solana from the FTX estate. And I don't want to get you in trouble or anything, but what can you tell us about, that?
Yeah, so Galaxy, like many investment banks, and if you think about Galaxy, we are an investment bank inside of crypto. There are sides of the house, right? There's the client-facing side, the fund side. We do it exactly the same. So there are walls that separate that. What I can say about the Solana, on the asset management side of the house, we were an advisor to the estate, and so we acted as a fiduciary to them. On the markets side of the house, we have a laundry list of clients in the ecosystem that want to participate. So we got into the process no different than anyone else got into the process with the estate. And we bought, this locked Solana, some of it, for our own accounts, some of it for clients' accounts. And so we thought it was a good value. We thought it was a smart bet. Obviously, 4 years, which is the lockup period on some of this, is an eternity in crypto, right? It's an eternity in any asset class, let alone crypto. And so, but we had clients who felt that it was a smart bet for them to make, and they decided to participate and come along with us on that.
Yeah, well, you kind of answered my next question, which was, what's going to happen to these funds? Because there has been, obviously more than just Solana, which was tangled up inside of that. But we're kind of seeing all of that is really getting resolved at the moment. And I think that Galaxy was such a perfect fit for this because you all play a significant role as a validator in the Solana ecosystem as well. So it kind of fits right into your existing line of work already. I'm curious, kind of taking us back to maybe like day one, what are your thoughts on Solana as a whole? I mean, especially here recently, it's been really hot. We can look at metrics like DEX volume and compare its trading and activity to things like Ethereum, which I've seen a lot of people doing. And it's been performing quite well as a competitive layer one to Ethereum. But I'm curious why you all chose to validate them.
Yeah, I mean, we validate a lot of projects and protocols, to be fair. Part of our job is to facilitate people in the ecosystem, not necessarily pick winners.
Yeah.
Goldman Sachs doesn't say I'm doing ExxonMobil and I'm not doing BP. They provide services to people in the industry and try to do it in a way that's responsible and gets your client the outcome they want. So from a validating perspective, we were always going to validate, the top 25 coins and projects and so on and so forth. From a, to return to the fundamentals that we're discussing right now with regards to Solana and other things, I think that people are moving down the tail, moving from Bitcoin to ETH, and then they look and say, what's the next logical one? Okay, well, in terms of use and adoptability, it's Solana. And then you can look and you can start to go further down. People are always looking to get the next good thing, right? And so I think you're starting to see people's mind share move from, okay, well, ETH has got all these benefits. There's a lot of things here that aren't necessarily, what I'll call protocol updates, and that's the news of the day. That doesn't always stir men's souls, right? But if all of a sudden you see all these meme coins, that are popping up, and you're like, wow, there's really a use case there, and what does that extrapolate to? And you see some of the partnerships and deals, and so I think people are making the move that way.
Yeah, it's definitely good to kind of get inside the minds of some of your clients and yourselves and all that kind of stuff. And I think it puts some of us, Crypto 101 sort of retail folks, maybe at peace, or because it lets us know that institutions and high net worth individuals also sometimes feel that FOMO of like, what's the next big thing? What am I going to possibly miss out on? And a lot of times we think like, oh, they're up there. They're the experts. They never feel FOMO. They're never prone to the same human emotion.
Perfect world up there.
Yeah.
No, it's probably worse because not only does it impact people's wallets directly, but they have a litany of clients and tables. And that guy made 28% last quarter, and you only made 22. What happened? And you're like,
and you're talking about a lot bigger numbers too. It's like 28% of $1 billion, not 28% of my $1,000, or So I can see things being magnified there.
Well, one of the things I really liked, Jason, is that you said that you're essentially looking into like the top 25 ecosystems, and part of that, you're not choosing a single winner. And I think that that's one of the biggest mistakes that people make in the crypto space, is that they become maximalists or they become hyper focused on a single project or a single niche instead of betting at the overall health and growth of the industry. And I think that's where a lot of people in crypto go south, is that they go maybe too far down the rabbit hole, if that's possible, right?
Well, too far down the rabbit hole on one sort of protocol, like they're maxis. I think that's always a bad thing. Like you said, like, Goldman doesn't just only service, BP. It's like they're going to service the whole industry.
100%. I think that one of the things about crypto is it's still very tribal. And you have this, where people become, I'm part of this. And you see it, whether it's the XRP army or, like all these different groups have.
Marines.
Yeah, 100%. Like you have all of this stuff that's there. And the reality is each of these solves something a little bit different, right? Like it isn't like if you think about crypto solving problems inside of finance, you wouldn't show up, as a repairman and only have a hammer in your toolkit, right? You need to have a full litany of things depending on what the problem is. And so all of these protocols and L1s and L2s and things that spin out from it solve a problem. And if they're solving the problem, you need to understand. And maybe they're solving it in one way and somebody does it a little bit differently. 20 years from now, we may get consolidation, but we're not at that point right now. We're at this again, another space analogy, at this inflation point, right? Where the universe, we've had the Big Bang, the universe is expanding rapidly, and there's going to be things that are, wildly successful, and there are going to be some that flare out or are successful in a period of time and then dissipate. We don't know, and so you have to learn as much as you can about all of them. It's hard. Right? It's easier for a place like Galaxy where we've got teams of people who are looking at these things and then come back and say, Eureka, I've got the answer here. But that's where we provide value then subsequently to our clients, and we're able to come in and say, hey, Have you thought about this from a research perspective? And what does it mean?
Yeah, I think Galaxy is very uniquely positioned for several lines of business. So obviously, I think it's definitely one of those stocks or whatever that is going to be 2025, 2026 a really, really hot performer. I'm not sure if it's available in the United States yet. Is it? Or is it just in Canada?
No, we're a Canadian listed company. I believe there's a US ADR. I have to be careful of what I can say and can't say.
Yeah.
But yeah. So do your own research on that front. But yes, there is a way to manifest it in the US.
For sure. And I'm going somewhere with this. By the way, I don't have any exposure to Galaxy or equity or anything like that. Just making an observation. Of course, not financial advice. Do your own research. But very uniquely positioned. And one of the lines that I think will be very cool for you guys is advising the tokenization efforts or the real world asset sort of conversion for traditional institutions, Citigroup or HSBC or I think BlackRock is probably going to be doing it themselves and trying to also compete on that level. But can you kind of talk about your thoughts? I mean, I know you're directly you're managing the trading business. How much overlap is there with the RWA stuff, and do you have any just thoughts on it?
Yeah, no, we're still a 500-600 person company, so it isn't as though we're big behemoth. Yeah, in terms of tokenization, we have a very robust effort. One of the things we tokenized Catherine the Great's Stradivarius for a client who was a trading client and who owned the Stradivarius and wanted to tokenize it.
Is that like a sword?
Well, no, it's a violin.
Oh.
So it's one of those very expensive ones, and tokenized it for the and there's a process. It was in some special temperature controlled room and a custodian in a very specific place, tokenizing it so that you can subsequently create a DAO and do other things so people can petition the DAO and then be able to take the asset. So there are things that are important. I think that back to my comments earlier about regulation, there are some elements of regulation that haven't fully wrapped their head around how does a DAO work, right? How do you regulate that? Is it and where do you regulate it from? Is it offshore? Is it onshore? Are the rules we can look for things, but they're not quite perfect fits. And as we get clarity there, I think you'll see more assets move into that tokenization world. I think that's very much the future. That's one of the things that you find a lot of commonality between TradFi, large financial institutions, as well as your John Q. Public, who both see the value in it and want to participate and take advantage of it. So it's something that we're active in. We'll continue to be. We'll continue to grow that business line, and we'll continue to iterate on ways to get that legal regulatory framework, because how do you perfect the lien in that? How do you, in order for it to become truly valuable, I can perfect a lien on an automobile, then I lend you money against your car. There are certain things where it becomes a little more difficult. So we need to get some clarity around that. We're working very, very hard on that.
Yeah, no, and yeah, even just the underwriting process for, real world assets, it's like such a specialty that it's, do these protocols, I don't know, not to throw any certain names out there that are real world asset lenders, but are those interest rates that you're getting really reflective of the real risks that are in the business of, say, for instance, some, scooter company in Africa that, you're lending money to at, 20%. Should it be 50% or whatever? And it's there's all, and how are you going, if they fail and they take the money, how are you going to go recoup that money? There's so many real world risks.
It's funny you say that. I mean, that was one of the, that's one of the difficulties if you think about to bring it slightly on a different bent. People talk about hedging hash rate or hash price always, right? And understanding okay, if you are the producer of the Bitcoin and you want to hedge forward, what do I do if you don't perform, right? 2 months in, you stop giving me Bitcoin and I've given you all the money on a forward basis. How do I handle that? Do I have to go to, at the time we had some large miners in Kazakhstan who were, looking for things. And I'm so I have to go into the middle of a war zone with and get a bunch of
no rule of law,
a bunch of ASIC miners. And what's that going to cost? And what if the boat gets misidentified and sunk? And like you start to play these crazy games where you go into a hole and you're like, we're not doing that one. It gets there. But yeah, I mean, that's one of the hardest things. One of the things that we do well at Galaxy is understanding all the elements of the risk in the entire deal, whatever the deal is. Is it credit risk? Is it flat price risk? Is it reputational risk? All of those different elements, and that's one of the reasons why we've been able to survive, because there were things that people were doing, in these tough times, and we'd be like, I don't think that's a good idea. I've seen that story before, and other, that's where having a little bit of gray hair. I know everybody I get people give me a hard time sometimes. Oh, okay, boomer, but then. But having a little bit of gray hair and say, I've seen this before. I know how this story ends. I don't know when and I don't know where, but I know that at the end the bad guy usually gets shot, and I don't want to be on that side of the equation. So
yeah, history often rhymes, I suppose. Yeah, no, it's incredible to be able to bring that insight to a team of traders and investors. Just real quick on that, I had one question I was going to follow up on the RWA stuff. Oh yeah, it was basically like, at the end of the day, like I'm trying to think of like where like the value ends up getting passed to. Like I think the Citigroups or like the HSBCs, like, or Franklin Templeton, I saw they did a study that they said that settling 50,000 transactions would cost them $50,000. And settling 50,000 transactions on a blockchain would cost them like $1. And it was like, a 30,000 or a 50,000 times sort of difference of settlement cost. And so it's like, does that value and like, does that ever get passed back to the consumers? Basically, like the question I'm asking is like, is this something that eventually me and Brendan at home on our phones are going to benefit from?
Eventually. All price, all commissions go to zero. All margins go to zero. Like that is, it is universally accepted everywhere that's what's going to happen. If you're building a business and you don't assume that the margins that you're going to make on your business are going to go away, competition comes in, and I'll do it for 5. Well, I'll do it for 4. We'll go pound sand. I'll do it for 3. 3. I'll do it for 2. It's the old, 6-minute abs. Why not 6-minute abs? Why not 5? That's what happens. It moves, and so in time that will happen. It takes a few cycles for people to get comfortable with it, but once it becomes easily understood, then those margins will go to zero, and you will see that benefit ultimately. You'll see the end user ultimately benefit from that.
Yeah, agreed there. It's been so cool to see the space grow, especially when it comes to everything that we've chatted about in tokenization. I know a lot of people tune in, they hear us talking about it all the time and the opportunity that's out there. And I think that answers a lot of people's questions about like, what are the ways that it's going to affect me? How can I get involved? How can I be impacted by this? And slowly but surely, we're going to start to see that come to fruition. But before we let you go here, we're moving into the final stages of 2024. A lot of us are stoked for what's going to happen in 2025. I mean, just to wrap up this year, the monumental level of Bitcoin adoption, I think, surpassed what most of us thought was possible. Seeing Bitcoin ETFs, seeing Ethereum ETFs. I mean, there's talks now that Microsoft wants to adopt a similar strategy that would be more like what's happening with MicroStrategy. They're going to be voting on that here, and whether that will happen again, still up in the air. I saw that Van Eck just a couple days ago was talking about a $3 million Bitcoin prediction. Wow. And it's been so cool to see all of this, and it's been such a monumental year. But it raises the question, can next year, can 2025 beat what we've seen so far? Not talking about price, but I'm curious to get any kind of bold predictions that you have for the market, and whether you think maybe next year could be something that's even more high tempo.
Spotlight's on.
I do think, depending on the outcome of an election here in a week, I do think that depending on that, you could see Bitcoin take out 120K, obviously 100K on there. Now that's not going to happen instantaneously, so expect to wake up, in 2 weeks and say, oh, look at this, we're trading 120. But I think that there'll be enough catalyst behind it and enough of a tailwind to push it there. I think the other thing to watch is going to be some of these other altcoins and where that goes, because whether you're a crypto native or a TradFi veteran, nobody likes buying somebody else's bags. There's a little bit of that doesn't always feel good, and so people are looking for their next thing. And so as you kind of look through where there's activity, but I do think that you're going to get clarity regardless. Either administration will be more friendly to Bitcoin or more friendly to crypto broadly than what the Biden administration has been. And as we do that, you'll see the rest of the world have to, re-index. And I think all of that combined should be a nice tailwind here for the next, 6 to 12 months.
Yeah, I couldn't agree more. I'm very, very excited for where we're about to be. I know we're like 180, 190 days after the most recent halving, and this tends to be that inflection point where we start to ramp up. November tends to be one of the best months in crypto, going back to 2013. So a lot of good things to look forward to in the short term. And like you said, that long-term picture is beautiful. So Jason, thank you so much for joining us today on the Crypto 101 podcast. Where can people follow along with you on your journey? Are you on Twitter? Are you on Telegram? Or
I am very, very specifically not intentionally, but our research team, I have to be careful, but our research team puts out an awful lot of excellent content that's very consumable and is available to everyone. And I think that, for no matter where you are on your crypto journey, that reading those pieces that are put out on regular cadence will definitely help people learn. We want to educate. We want to be good stewards of the position we find ourselves in. Mm-hmm. And so I recommend doing that. Unfortunately, though, like I said, no. Follow Novo. Novo's on Twitter.
Yeah, he's a good follow.
We can't have too many headaches. Mike has got excellent insights on things, and obviously the research department here does a stellar job. So
yeah,
best way to follow along.
Awesome. Well, hey, we're going to have those links to the Galaxy's research department Twitter. I believe that's run by Alex Thorne.
Yep, Alex Thorne. He and his team do an excellent job.
Yeah.
And we'll find them being receptive as well. And if there's questions or things you need, hey, have you looked at this? Maybe they have, and if not, they will.
Love it. Awesome. Well, hey, Jason, thank you so much. We'll let you get back to the desk. Please come back and join us anytime you want to chat. If you find something interesting and you want to go on a tirade or whatever, you let us know, and this is the place to do it.
So, fair enough. And the same holds for you guys. If there's something you want to talk about or that's pressing in the market, please just ping me and I'll be more than happy to come on and give you my views.
Awesome. Well, thank you so much. And everybody at home listening, thank you so much. Take care. We'll see you back same time, same place next week for some more great guests. Take care.